Generational wealth has historically been built on the bedrock of premium commercial real estate, an asset class consistently outpacing the growth of traditional markets. However, these prime locations are protected by a high capital barrier. The multi-million rupee entry costs systematically exclude the middle class from participating in high-growth corridors. To see how this barrier functions in practice, we can examine a specific plot of verified land positioned directly in the path of rapid urban development. The fair market value for this single property is approximately 1.4 crore rupees. We can see the corridor's momentum on the financial sheet. While the initial asset value was 1.4 crore, the current valuation has already climbed to over 1.67 crore. Under the traditional model, capturing that growth is a logistical nightmare. It requires massive legal overhead, complex title registration, and a total capital lock-in. Until now, gaining exposure to a verified 1.67 crore asset was reserved for institutional-level wealth, leaving a massive gap between the property's potential and the average investor. Breaching that gap requires converting physical property into a real-world asset, or RWA, a digital representation of the physical deed. Legitimacy in the RWA space is defined by verified financial structuring and total transparency, ensuring the digital asset accurately reflects the physical reality. The financial data shows the hard costs of this verification. The platform has already settled over 6.8 lakhs in government stamp duty to ensure a clear, legally recognized title. An additional 1.4 lakhs was paid for registration charges, certifying the property's standing with local authorities. For long-term protection, the financials include a dedicated sinking fund of nearly 3.9 lakhs to cover any future maintenance or unforeseen liabilities. This layer of verified legal and financial data is what transforms a physical plot of land into a high-grade financial instrument. With the legal foundation set, the property is fragmented using the Polygon blockchain, which acts as the ledger for these fractional holdings. The 1.67 crore property is divided into exactly 19,431 digital pieces, or tokens, each representing a share of the total asset. By distributing the value across nearly 20,000 units, the cost of a single token is just 860 rupees. To enter a position, the platform requires a minimum purchase of 23 tokens. When you multiply that minimum requirement by the token price, the total entry cost is approximately 19,780 rupees, a fraction of the 1.67 crore required for the whole property. This shift in math represents a fundamental change in access, allowing the average investor to enter a market that was previously out of reach. Managing this investment is entirely digital. Investors can select properties, commit funds, and monitor their portfolio's growth directly from a smartphone. The growth potential for this specific plot is significant, with an expected annual return on investment of 24%. Unlike traditional land deals that only pay out upon a final sale, this model uses a yearly dividend distribution cycle to provide ongoing liquidity. The investment timeline is structured around a 12-month lockup period, followed by a 36-month buyback window, providing a clear path for realization. If a minimum position of roughly 20,000 rupees compounds at that 24% annual yield over the 3-year window, the growth trajectory demonstrates the power of early-stage real estate exposure. As these digital structures scale, the historic institutional dominance over high-growth real estate development is beginning to face a new form of competition. By transforming physical land into intelligent digital fractions, the barriers to entry are falling, allowing everyday investors to start small and participate in the world's most proven wealth engine.